Here are the crypto top headlines covered in this video. Ripple CEO says Gary Gensler's animosity toward crypto will cost President Biden the 2024 election. Next, Bitcoin ETF issuer VanEck files for Solana ETF in the U.S. Also, Coinbase sues SEC, FDIC over FOIA noncompliance. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We have a quick request that doesn't cost you anything in order to help. Help us grow this channel to 1,000 subscribers by September, which would be our channel's one-year anniversary. All we ask is that you click on the like and subscribe buttons as well as the notification bell. By clicking on these, it does help grow the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, Ripple CEO says Gary Gensler's animosity toward crypto will cost President Biden the 2024 election. Ripple boss Brad Garlinghouse has openly criticized Gary Gensler, the chair of the U.S. Securities and Exchange Commission, suggesting his actions could jeopardize President Joe Biden's chances in the November election. This comes as Biden's presumptive Republican challenger, Donald Trump, has actively shown his support for crypto. Garlinghouse says Gensler will cause Biden to lose presidency. Speaking at the Bloomberg Invest Summit on Tuesday, Gensler declined to comment on the upcoming election or the potential impact of crypto on it. "I don't speak about elections," he posited, when asked about the convergence of cryptocurrency and politics. He was responding to questions about former President Donald Trump's increasing support for cryptocurrencies and criticism of his commission from prominent billionaire entrepreneurs like Mark Cuban. Gensler then claimed that the crypto sector is a field where the leading lights from a couple of years ago are either in jail, about to go to jail, or awaiting extradition. "That's a field right now where the public has really been harmed, and there's significant noncompliance in the field," the SEC chief added. Ripple's Garlinghouse slammed Gensler's remarks as absolute nonsense, and this slander about all crypto execs going to jail from the man who completely missed FTX and actually cozied up to SBF and wasn't even invited to the DOJ announcement about Binance, he continued. According to Garlinghouse, Gensler would have been fired a long time ago if he was really working for the American people, as he contended. Gensler will cause Biden to lose the election, he summarized. Spot Ether ETF approval process going smoothly. On the topic of the highly awaited Spot Ether exchange-traded funds, Gensler also provided an update. He didn't reveal the exact launch timing of the Ether products, but he indicated that the progress was going smoothly. "It's really about the asset managers making the full disclosure so that those registration statements can go effective," he postulated. "What is in front of us, and it's done at a staff level, is what's called the registration statements, the disclosure statements," Gensler added. "Again, these disclosures are really important. They're important to investors making investment decisions." The SEC approved 19B-4 forms for Ethereum ETFs from 8 applicants last month. As reported by Xi Crypto, the SEC boss previously stated that the ETH-based investment vehicles would start trading on U.S. exchanges by the end of this summer. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, Bitcoin ETF issuer VanEck files for Solana ETF in the U.S. According to VanEck's head of digital assets research, VanEck is the first company in the United States to file for a Solana ETF. VanEck, one of the first issuers of spot Bitcoin exchange-traded funds in the United States, has filed for a new Solana ETF. Matthew Seigel, head of digital assets research at VanEck, took to X on June 27th to announce that the firm has filed for a Solana ETF with the U.S. Securities and Exchange Commission. The new fund, called the VanEck Solana Trust, aims to capitalize on Solana's decentralized nature, high utility, and economic feasibility, Siegel said. According to the executive, the trust is the first filing for a Solana ETF in the United States. In the post, Siegel provided a few remarks on why the company believes SOL is a commodity. He wrote, "We believe the native token SOL functions similarly to other digital commodities such as Bitcoin and Ether. It is utilized to pay for transaction fees and computational services on the blockchain. Like Ether on the Ethereum network, SOL can be traded on digital asset platforms or used in peer-to-peer transactions." In the filing with the SEC, VanEck specified that the VanEck Solana Trust is expected to be listed on the CBOE BZX exchange should it be approved by the SEC. Solana Trust aims for growth. The VanEck Solana Trust's investment objective is to reflect the performance of the price of the Solana cryptocurrency, excluding the expenses of operations of the trust. The filing states that the trust will value its shares daily using the market vector Solana Benchmark Rate Index. This index is calculated based on prices provided by trading platforms that Market Vector considers the top 5 SOL trading platforms as determined by the industry-leading CC Data Centralized Exchange Benchmark Review Report. VanEck's Solana ETF filing comes shortly after the U.S. SEC approved the launch of spot Ether ETFs in the U.S. on May 23, 2024. The approval ended long-running arguments about the status of ETH cryptocurrency, greenlighting it as a commodity rather than a security. Subsequently, the SEC reportedly dropped an investigation into whether Ether is a security on June 19th. Our next top headline: Coinbase sues SEC FDIC over FOIA noncompliance. Coinbase's lawsuits target the SEC and FDIC for alleged noncompliance with FOIA requests regarding Ethereum's proof-of-stake transition. Coinbase has filed lawsuits against the United States Securities and Exchange Commission and the Federal Deposit Insurance Corporation, or FDIC. According to a Fox Business report, the lawsuits filed on June 27th allege that the SEC and FDIC failed to comply with Freedom of Information Act, or FOIA, request submitted to the U.S. District Court for the District of Columbia. Coinbase's lawsuits accuse the federal agencies of attempting to exclude the crypto industry from the banking sector. FOIA requests. The FOIA requests aimed at the SEC sought information on the federal agency's view on Ethereum, specifically the blockchain's shift to a proof-of-stake, or POS, consensus mechanism. Coinbase asked for records related to Ethereum 2.0 and previous investigations involving Zachary Coburn and Enigma MPC through its consultant firm, History Associates, Inc. According to the legal documents, History Associates stated, for nearly 2 years, a wide array of federal financial regulators, including the Securities and Exchange Commission, or SEC, the FDIC, and the Federal Reserve Board, have used every regulatory tool at their disposal to try to cripple the digital asset industry. This FOIA lawsuit seeks to bring to light the FDIC's role in that unlawful scheme. Coinbase's allegations. Coinbase's complaints argue that the regulatory actions against the crypto industry are part of a broader effort to undermine it. The lawsuits describe the SEC's and FDIC's actions as a coordinated attempt to cut off digital asset firms from essential banking services. According to the legal documents, the SEC's refusal to release records from concluded investigations is seen by Coinbase as a deliberate obstruction to understanding the legal framework behind the agency's enforcement actions. Ongoing regulatory disputes. This latest legal action is part of what History Associates describes in the legal documents as Coinbase's ongoing conflict with U.S. regulators. Paul Grewal, Coinbase's chief legal officer, stated in an X thread, "Financial regulators have used multiple tools at their disposal to try to cripple the digital asset industry. This is no way to regulate, and this is no way to operate a transparent government." According to the legal documents, History Associate highlights the broader debate over how digital assets should be regulated in the U.S., as Coinbase advocates for clearer guidelines. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.